Ladies and gentlemen, it's my pleasure to introduce Jane Kittel today. Born and raised in Port Augusta, she began her career in the financial services industry in 1986 with AMP. Jane joined Westpac in 1995, held a range of leadership positions and became Westpac's General Manager of Pacific Banking with responsibility for 7 countries. Jane has been Managing Director of BankSA since October 2010. She serves as Chair of the Big Issue Advisory Board in South Australia, Director on the Catherine House Board, Chair of the MBA Advisory Board at the University of South Australia, and is a member of the Australian Institute of Company Directors. Jane will speak to us today about where the South Australian economy is headed. Please welcome Jane Kittel.
Good afternoon, everyone. I'd like to acknowledge firstly that we're meeting on the traditional land of the Garma people and pay my respect to elders both past and present. It's certainly great to be here today, and if you haven't had an opportunity to look at the Adelaide Oval, heading back towards the other side of town, you should make some time before you leave, because we're not going to see it like this for much longer, and it's a pretty exciting development and transformation that's underway. The Adelaide Oval redevelopment is certainly just one of a number of projects under construction in Adelaide, which is really helping to drive some economic growth across South Australia. And I'm certain, that for someone like me who lives in the city area, in fact, I'm very much looking forward to the finished redevelopment of not only Adelaide Oval but the River Precinct, which I think is going to make Adelaide in our CBD area a very exciting place to be. Today I'd like to give you an overview of the South Australian economy and where I see us headed. I'll also touch on some of the structural changes resulting from the internet and rapid shift of commerce to online, and really look at how that's playing out for the South Australian economy. Now, with almost 1 in 3 South Australians as a customer of BankSA, I think it's fair to say that we're a pretty good barometer of what's happening in the local economy. There's no doubt that the world is a very challenging place, and certainly a changing place as well right now. But I think it's important to recognise that Australia and South Australia are in a strong position compared with many other parts of the world, as we see the impact of the global financial crisis continuing to reverberate globally. Now, there's no doubt, and I'm sure I'm not telling anyone anything here when I say that confidence is certainly subdued, both here in South Australia and more broadly right across Australia. There's also been a fundamental shift in the way people are thinking about debt, and we continue to see a move to deleverage, both from businesses but also household balance sheets. Household saving rates in Australia have moved to the highest that they've been in 20 years. And they're well back into positive territory at more than 11% of income, after falling to the into the negative between the years of 2002 and 2005. Now, I will show just a few slides today as I'm talking as well. And the first one is looking at South Australia's unemployment rate. Now, our unemployment rate for July, and the figures that were out just last week, in fact, the result was 5.4%. Now, it's slightly above the national average of 5.2%, but frankly it was interesting to see the month prior it was at 6.4%, so for June it was 6.4%, and prior to that in May it was 5.2%. So quite a bit of volatility, and frankly, that does make you question sometimes the data. So the reality is, that is our official data, and that's what we have to work through. I certainly know that these figures are closely watched by us and by many others around the economy. There's a close link between unemployment rates and the fortunes of the residential property market. And this graph shows trend unemployment data over the past 7 years and how we've fared against the national average. And you can see historically we're usually just slightly higher on our unemployment rates. I think it's also worth just putting these figures into context though. So if you compare Australia and South Australia and our unemployment rates to those of some of the countries overseas, so firstly Spain at 24.8%, Greece at 23%, and Ireland at 14.8%. Now across the entire European Union, the unemployment rate is 11.2%, with that average brought down by the strength of the German economy. So Germany is currently running with an unemployment rate of 5.4%, so the same as South Australia's. Now the strong banking system that we do have in Australia has been an important reason why the Australian economy has held up so well in the aftermath of the global financial crisis, along with, of course, our strong mining sector and demand from China for our commodities. What we're faced with in South Australia, and also more broadly in Australia, are low levels of confidence. And it's hard to see as you look into the future what the catalyst is going to be to fundamentally drive a significant improvement in confidence. But frankly, that's what we need. When you look at the fundamentals of our economy, as I said, they are strong, but really everyone is sitting on their hands at the moment and have been for some time. So people are putting off major decisions because of uncertainty, certainly in the global financial markets, but also the political situation in Australia with a federal minority government, and I don't think really it would matter which side of government was in power. That uncertainty is certainly driving lower confidence right across the country. A sustained period of stability in Europe is definitely required for us to see an improvement in confidence as well. It's also worth just taking a look at the Australian dollar versus the US dollar. Now the strength of the Australian dollar, which I expect to continue to be at or just above parity with the United States currency for the next 12 months at least, is accelerating some of the structural changes already underway in the South Australian economy. So the appreciation in the Australian dollar has been quite substantial. Now it's worth remembering that in April 2001, our dollar was as low as US 47.75 cents. It has of course fluctuated since then, but the real period of strength over the last 4 years has coincided with the mining boom and the AAA rating of Australia's economy, where we've managed to avoid the serious problems resulting from the impact of the global financial crisis that certainly has caused major issues for many countries in the Northern Hemisphere. Now, our manufacturing sector in particular has been going through a period of painful adjustment. It's having to find new ways of competing in global markets, and the strong Australian dollar is certainly making it very hard to compete on labour costs. Mass production in China and Korea will continue to have a large influence, and with the quality of the goods that are being produced by factories in those countries continuing to improve, it means further pressures are likely. The retail sector itself is also undergoing significant structural change because of the rapid digitisation of the economy and the shift to online commerce. This is also being exacerbated by the strong Australian dollar and the increased spending power of locals who are buying from overseas-based online retailers. Again, this trend was well underway, but the keen pricing and greater choice is certainly very tempting for many Australians. Now, I'll speak a little bit more later about the digitisation of the economy and how I see it impacting South Australia. But I wanted to touch on one of the bright spots, and that's certainly mining and mining-related industries, which hold enormous potential for South Australia. South Australia does have the geology to become a true mining state, but it will definitely take time. One aspect that continues to be under the radar somewhat is that in May 2011, the federal government announced that it would allow mining exploration in the Woomera prohibited area in the north of the state. Now, this is an area the size of Britain, and it's estimated to hold $35 billion of mineral wealth in the ground, including 62% of Australia's known copper reserves. There are now 20 mining projects either operating or under construction in South Australia. Now, 10 years ago, that number was 4. So we have been making progress. Whilst we're not in the league of Queensland and WA, we certainly have the resources in the ground, that whether they're actually mined now or in the future, it's a very good place for South Australia to be in. Most of the spotlight has been on the likely timetable for the Olympic Dam expansion by BHP Billiton and whether delays on the original timetable will occur. The $30 billion plus expansion is clearly a massive project for this state. It will be fantastic if it does go ahead as scheduled, but frankly a delay of a year or two, or a slower staged approach, should be put in context. A delay, from my perspective, won't break our economy, but when there is a go-ahead, it will clearly add major impetus. It's a question of timing. Now, a final point on the strength of the Australian dollar. So whilst it's challenging for many industries, one of the real positives for South Australia is that we're exporting to the right regions, and our major export destination is China. So this next slide shows the merchandise exports to the various countries. Now, in the year to the end of May 2012, our merchandise exports to China were $2.3 billion. 2 years earlier, it was just above $1.1 billion. Now, being linked so closely to the world's major growth centre is a real plus for us. I know China's economic growth has come off in more recent times, but it's still very high, with the Chinese government's own forecast for GDP growth for 2012 at 7.5%, which will be lower than the actual growth of 9.2% experienced in 2011 and 10.4% in 2010, but still at really quite high levels. So we remain in a strong position, in particular when it comes to our grain exports. And we've had 3 good seasons in a row now, which has been fantastic for our farmers, and there's a great opportunity for us to enhance our reputation as we go forward as the food bowl for the fast-growing Asian region. When looking at the economy, I think it's also important to consider population growth. Now, one of the weaker areas for South Australia, just in the last year or so, is population growth. And we're experiencing a similar trend to that's happening nationally. Overseas migration has declined as the federal government reduced migration intakes. It's also worth mentioning the impact of the high Australian dollar here as well. So South Australia has a large overseas student population, with our highly regarded universities a real attraction. But the strength in our currency is a factor when prospective students and their families are making these decisions. In the first 6 months of this year, enrolments by international students in our educational institutions are 10% down on the previous year. Still think there's lots of opportunity for us though in the education sector as we go forward. Now, I'd also like to just talk a little bit about our property market and some of the trends that we see here in South Australia. The housing sector has softened considerably in line with lower confidence levels and general uncertainty in the community. Underlying demand for housing is likely to stay relatively weak in the short term, in part because of slower population growth as overseas migration slows. For South Australia, this issue has also been exacerbated by the natural tendency of some of our young adults to seek opportunities overseas and interstate. Perth, of course, is becoming more of a draw card because of mining-related opportunities. And of course, there's the traditional pool of Sydney and Melbourne. Adelaide's traditionally known as a residential market that doesn't experience the sharper fluctuations in prices that Sydney and Melbourne experience, and it's certainly seen as a little more slow and steady. We had strong price growth in the years of 2003 to 2008, but in the past 12 months there have been minor price declines. Now, the price decline is also impacting the traditional property investor, and we're seeing a diminishing number of those in the market now because the capital growth that they're searching for, along with rental income, remains subdued. But with a small decline in property prices and lower interest rates generally, you do see an improvement in affordability. Affordability does still, however, remain a challenge, especially for young people entering the market. One of the interesting trends that we're seeing at the moment at BankSA is a real appetite for fixed-rate home loans. Customers are looking to lock in some of the very good offers that we have and seeking some certainty in their repayments. Just to give you a bit of an idea of what that impact has been, in the months of May and June, around 35% of customers taking out a home loan were choosing a fixed home loan rate. Now, in the same months of May and June last year, that was around 8% of customers. while in 2010, in those same months, it was 5%. So quite a significant shift in a couple of years. Now, I should take the opportunity to give a little bit of a plug. We do have a very good fixed home loan rate, and whilst it mightn't be for people in this room, if you've got family, make sure they're having a look at BankSA. Thank you. Now, I also wanted to share with you, and it was great to see the website being shown earlier, but I wanted to share with you some exciting news for us, which is in the mobile banking space. So just last week we launched a new feature on our BankSA mobile phone banking application for smartphones, and that's called Property Mate. Now, Property Mate lets you rate and compare properties when you're out and about at open inspections. And as part of our research here in South Australia, we found that the average South Australian home buyer inspects around 12 properties before deciding on a purchase. Another interesting trend that we're watching closely are demographic changes, and one in particular is the impact of the looming retirement of the group known as the baby boomers, those born between 1946 and 1965. How many of those in this room? So look, I'm sure I'm not telling you anything once again when I say that the sharp falls in global share markets since late 2008 have clearly caused a rethink in the retirement plans of many people. And that has often resulted in plans to extend the time they intend staying in the workforce. Another option for some of these baby boomers is to downsize or sell assets to help boost retirement funds. The sale of investment properties or holiday homes is likely to be among their considerations. Now, the timing of those sales in challenging property market requires careful planning, but it is something that we do expect to see more of. Downsizing from the family home to a smaller but more modern property once adult children have left home is also an increasingly common strategy to bolster retirement savings. I did hear from someone actually recently that they thought one of the biggest boosts that we could give to the economy was for parents to kick out of home their adult children, so that they start investing as well. Generally, we're also finding that those with a home loan are much more focused on paying down debt. So our own figures show that around 55% of our home loan customers are in advance of their minimum contractual payments or making regular additional payments or lump sum payments. So it's quite a significant portion of our customer base that are ahead in their home loan repayments. So in the post-GFC environment, people's behaviour, as I've outlined earlier, their savings patterns have changed, and I expect that lower credit growth will be with us for some time in the banking industry. Annual housing credit growth in Australia is at a 35-year low of 5.1%, and that's according to the Reserve Bank of Australia's own data. Our expectation is that it will stay at mid-single digit levels over the next few years as the focus on deleveraging continues. Now compare that to the period of 2002 and 2004 when housing credit growth in Australia was running at around 20%. The average for the pre-GFC period was 14%. So that's a big change for the industry to adjust to. Now, I'd also like to talk a little bit about some of the rapid changes that are taking place as the digital economy accelerates. And also, we're seeing more and more transactions across all industries occurring online. Now, in broad terms, I do think this is a positive for South Australia. Our own BankSA Trends Economic Bulletin, published in late June this year, found that our state would be a net beneficiary because the geographic disadvantages that we've experienced traditionally of being a long distance away from major markets on the eastern seaboard of Australia and a longer distance from Asia than other cities becomes less of a factor in the online world. In the past, that physical separation from other markets has been a drag on our economic potential, but in the digital world, that starts disappearing, provided businesses are nimble and able to fully utilise the benefits of accessing new customer segments and geographic markets. Our Trends Bulletin, which is produced in conjunction with Deloitte Access Economics, found that the direct contribution of the internet to the Australian economy in calendar 2011 was $50 billion. Now that equates to about 3.4% of our national income and makes it bigger than the farming sector or the utilities sector. the direct contribution of the internet to the Australian economy is projected to grow to $70 billion over the next 5 years. South Australia, if we look at South Australia, we make up about 6.5 to 7% of the national economy. So if you equate that out, it means that the contribution of the internet to the SA economy was somewhere between 3.25 and 3.5 billion. Therefore, over the next 5 years, the direct contribution of the internet to the SA economy will actually get close to $5 billion. The acceleration in digital commerce means that customers have increasing power and will be more demanding. Businesses that are willing to embrace change and implement new business models to adapt to changes in technology will stand to benefit most. In my own industry of banking, there's a substantial shift underway, with customers looking for convenience and speed. Customers want immediacy and the ability to do things while they're on the go, and increasingly outside of traditional banking hours. Across the banking sector, the changes have been substantial in the past 5 years. More than 27% of our transactions are now done online, which comprises internet banking on computers through mobile phones and tablet devices such as iPads. This compares with around 15% 5 years ago. EFTPOS continues to increase in popularity and represents around 43% of transactions, up from 29% in 2007. And ATMs are now at 18% of transactions, which is actually down from 24% 5 years ago. The big mover is, of course, the use of mobile phones for online banking. Now, at BankSA earlier this year, we introduced the option for our customers of opening term deposits and transaction and savings accounts, and just last month, the ability to apply for a credit card via your mobile phone. So it is a part of our environment that's rapidly changing, and we're seeing a significant growth in customer numbers as well. So the number of BankSA customers using their mobile phone for banking actually has doubled in the last 12 months, and we see that continuing to rapidly increase. Now, I'll just finish with where we see interest rates headed over the next 12 months. The Reserve Bank kept the cash rate steady at 3.5% at its meeting on the 7th of August, and it was something that was widely anticipated they would do. Now, our view is that provided global financial markets remain stable, then we expect the RBA may cut the cash rate in October by 0.25% and then leave rates steady for quite some time. And in fact, we believe in late 2013, the RBA is likely to start slowly increasing the cash rate again. So, there's obviously a lot of water to flow under the bridge between now and then, and a lot of things that can change, but with all of our economic forecasts, that's the view we have currently. So in closing, whilst there are some challenging times right now, there is still much to be positive about in South Australia, and it was good to see reported in the paper this morning that in fact South Australia has moved up the rankings in a survey The Economist runs on the best livable cities globally, and of course we've now moved from number 8 to number 5. So if I had a place to live, I'd much rather live in South Australia than anywhere else in the world. So thanks very much for listening, and I think we've got some time for questions.